Howdy folks, my name is Ben Brown. I work in the Department of Agriculture, Environmental, and Development Economics at The Ohio State University, and this is my weekly grain market economic update. This week we want to focus in on soybean exports. A couple reasons for this. Soybean exports are really important to the U.S. soybean price, even here in the month of June when we typically see a little bit of a seasonal price rally. But also due to the fact that we've seen record shipments out of South America, especially Brazil, to places around the world, and then due to the increased attention that's been given to the U.S.-Chinese trade negotiations as we head through 2020. All three of these are going to be important factors when we start looking at U.S. soybean price come fall. I think it's easy for us to overlook how important growth in exports has been to the rapid expansion of both U.S. soybean acres and price. Exports as a share of production explain roughly 44% of the price differential in soybeans year over year, which is a large share considering all the other factors affecting price make up just over half. Global demand for soybeans has been the driving factor for the expansion in U.S. soybean exports, as global demand has increased 5% year over year for the last 40 years. Very few other row crops can say that they've seen this rapid growth in world demand. For the current marketing year that ends August 31st, export commitments through the first week of June sit just over 1.6 billion bushels. While commitments to China have increased this year compared to last year, our commitments to the rest of the world are down, and as a result, our total world commitments are 7% behind where we were the same week 1 year ago. U.S. export shipments as of late have increased, removing some of the fears and concerns around short-term logistics issues, but we still remain 76 million bushels behind on exports shipped from reaching USDA's current export target. Factoring in outstanding sales of 284 million bushels puts the U.S. directly on pace to reach USDA's new export target of 1.65 billion bushels. As a reminder, USDA lowered this export target 25 million bushels in the latest June WASDE report due to the slow pace of sales. With 12 weeks left in this marketing year, export inspections need to average about 21 million bushels per week to reach this target. Over the last 4 weeks, export inspections have averaged only 13 million bushels, meaning that we'll have to increase export inspections and shipments to reach the USDA's target. China currently holds about 34% of the outstanding sales for this marketing year. Given that it takes about 3 weeks for soybeans to reach China from the United States once shipped, sales that are expected for delivery in August will be needed to be loaded and shipped in the next couple of weeks to reach this target. It's likely that China will roll some of these sales from the current marketing year to the next marketing year as a result of these logistics. Overall, I expect soybean exports in the current marketing year to come in down another 10 to 25 million bushels before the end of the marketing year. I do have some good news, however. Sales to China the last 2 weeks have really heated up. However, most of these sales are for delivery in the new marketing year, providing coverage from October through December. This is a more typical buying pattern by the Chinese. However, having strong U.S. sales and deliveries from the United States to China right after our harvest is going to be important for our ability to meet the just over 2 billion bushel export expectation for next year's marketing crop. Strong sales out of Brazil continue to provide pause for concern, however. Record shipments out of Brazil to China in the month of May and then so far through June have been impressive. One question that I continue to get and have been getting for the last 2 years is Brazil will eventually have to run out of soybeans, right? Well, Brazil has largely met the increased demand by Chinese buyers by increasing production of their own and then slightly reducing exports to other places around the globe. However, it's their increased production that raises the most concern. The estimated size of next year's Brazilian crop is expected to increase 257 million bushels. That's over this year's record 4.6 billion bushel crop. Currency exchange rates between the United States and Brazil continue to send signals to Brazilian producers to expand production. Forward contracting and locking in some nice profits are available to Brazilian producers at the moment. While China is expected to increase soybean purchases, the strength of the US dollar, increasing production in South America, and then at times the tenuous relationship between the US and China are all going to be concerning in our ability to meet USDA's export expectations for next marketing year. With this year's U.S. soybean crop projected to be the 4th largest ever, exports will be critically important to support even the U.S.'s current soybean price. And as always, I want to thank you for watching my weekly grain market update. You can get more information about grain markets, farm profitability, farm management, ag law, and ag policy at farmoffice.osu.edu. And as a reminder, we've got a couple of farm office events coming up. Peggy Kirk Hall, our field specialist in ag law, and Eric Romich, our field specialist in energy development, are going to be doing a series of webinars June 23rd through the 25th on shale and solar leasing. Our next Farm Office Live is at June 25th at 9 a.m. And then Aaron Wilson, our state climatologist, will be joining me on June 30th to do a grain market summer outlook. We'll be breaking down the highly anticipated U.S. acreage report as well as grain stocks on hand. I hope to see you there, and I hope to see you around the state of Ohio soon. Have a great day.